What's poppin', family? Welcome back to another episode of FDX Trading. In this episode, we're going to do a little trade recap. I got two trades for you, very similar setups. One of them was executed optimally, the other one, not so much. Well, we're going to get into this episode. And just for some context, I wanted to start with the market. This trade happened yesterday, which is Tuesday, May 17th. This was the market on the 5-minute basis. In the morning, we kind of drifted down, not really strong selling. Then eventually, SPY found support. And it was pretty much a bullish trend day. So with that being said, let's get into the first trade. As you guys heard in the intro, we had two trades, very similar setups. But one was traded well, and the other one, if we just had a little bit more patience and was able to read what was going on a little bit better, we would have been able to have two really good trades instead of, one really good trade and then one we took for a pretty big loss. So, and they pretty much counteracted each other. So the first one is MRK. This is yesterday. And like I said, SPY was in an upward trend day, which, helped the success of the trade. This is 9:30 right here. Pretty much, SPY gapped up. We pulled back on the stock, but eventually the true strength really showed. And just to show, the context, was this green candle right here. We were playing the break of the high or the break of the horizontal resistance right here from the previous day. And throughout the day, first half of the day, we really pushing forward no matter what the market was doing, stacking greens. And that was really the play, was the break of that level. So expanding the M5. Entry on this was 10:12 a.m. This is Eastern time, was right here. And this white line or this dashed green line were the levels that we had on the D1 set. And once the alert went off, we broke it on this candle. These three candles were above average volume. I entered right here at 10:12. Good entry. And pretty much rode it out. We actually added to the position at 10:41 right here in this pullback. And because SPY was pulling back right here and the stock was putting up three green candles, which is confirmation, and confirmation for me anyways. And then we pulled back a little bit, but then it was off to the races. So I had two contracts and we rode this all the way to 12:56, which was the 3/8 EMA cross. And in this portion right here, I gave back probably $40-$50 because I had two option contracts. So this 40 cents I gave back, just looking for confirmation. As you can see, we had pullbacks, nice red candles every now and then on the run up, but I wasn't fearful at all, and I literally just rode this all the way up, waiting for a 3/8 cross. So the entry was nice. The exit was nice. By waiting for the 3/8 cross, you give yourself a chance to see the next leg up sometimes. So either one of these is fine. At least it was a technical reason to exit. But the trade also worked because, once SPY found support, it was really off to the races. So this one couldn't have went any better. Entry right at the beginning. If you wanted to be conservative, would have been this pullback right here or this pullback. Of course, that's in hindsight. Pretty much every stock, once SPY found support at 10:45, had a similar chart. But now let's get into one that was a little bit different, because on Monday I did mention that you're not really waiting for a pullback to the level of alert all the time. Sometimes you're waiting for a pullback to VWAP. But in this other example, I took a loss on it even though it worked out almost the same. And I'll show you the difference in the trade. So this is FedEx. Again, this is from Tuesday. And we were playing the break of this SMA right here. Also this downward sloping trend line, this green line right here. And I'll show you on the M5. That's this green line right here is a downward sloping trend line. Gapped up above it. And then we consolidated here. And then, like I said, SPY found support at 10:45, and that's really when everything started moving. But I entered early I was aggressive. Entry was at 10:08. So right here. Now, looking back on it, this to me was the test of VWAP. And again, I wanted to be aggressive. So I got in right here on increased volume. But then we still had another retest of VWAP. And even though we dropped, and I told myself when I got in, I wanted a tight stop. So right when we closed below VWAP on this candle, I closed out. But I needed to keep in mind the ATR of FedEx. This stock moves. This candle right here is $3. So it needs more room than just, VWAP. And a couple of things that I could have did better on this trade, and it would have been a really nice win if I could have noticed it at the time, was this thing gapped up. We're also holding half of the gains of this big opening bar. So at the time, while VWAP is still kind of, keeping your stop tight, it's not optimal because your thesis can very well still be right even if it drops below VWAP. And a better stop would be either half of this big opening candle, or even down here, if we start to fill the gap, then you're clearly wrong and it's clearly turning bearish. So at the time, while I was happy, I honored my stop and what I wanted my stop to be already. This was already a $125 loss because of the ATR and FedEx. But in the next candle, it already started to show its relative strength again. SPY was putting up a red candle right here, and we put up a tiny green doji here, a green hammer. Putting all that stuff together, realizing that I'm not really wrong yet, could have kept me in the trade instead of just having an arbitrary stop because I wanted to keep it tight at the break of VWAP. And just a little bit of patience, 10 minutes later, would have been a very nice trade. But even to add on to that, if I wasn't so aggressive with it and waited for the second test, if there was going to be one, we could have entered right here on this candle, which is high volume. We already broke back above VWAP because we don't want to go long below VWAP, you know what I mean? Optimal entry would have been right here, but it's the same story as MRK, right? Pretty much could ride this whole thing until a 3-8 cross, which is right here. Obviously, that's not the whole move, but just to kind of keep it, real mechanical, real technical, we could have got in right here on the high volume. Even if we got in at the top here, 218.15, and get out here, that's still a $1.20 move, which, on an option is like 100, maybe $90. And then if we were even still had some confidence, or maybe we read something else in the market, could have took this pop. That's another, another 50 cents. Obviously, in hindsight, it's like, oh, you could just hold here and, but realistically, 3-8 cross probably would have been my exit. If I was stubborn or something and held it here, I hope I would take my profits here. After this, I definitely would have been like, damn it. But it still would have been in profit. So really, I just wanted to go through these two trades because they're almost the same setup. Just a little bit of nuance, within the setup. Both of them were strong. One of them had to test VWAP a couple times and even went below. And then the rest of the play was the same. Ride it up until you get a 3-8 cross. And that would have been a very nice winner. So just to bring up the charts, back to back. This was Tuesday, the same day. Pull back right in the morning, and then bam, over VWAP already. So we didn't even have to test VWAP. It could have just been the test of this green level right here, or even a test of the 3-8 would have been a good entry. And then you don't even got to worry until a 3-8 cross for the exit. On FedEx, and I think I had some notes for FedEx. I used the close under VWAP as stop, but it would have been optimal to notice the morning gap up and use either half of the opening bar or top of the gap as my stop out point. Thesis was not proven wrong yet just by merely the break of VWAP. Would have been a really nice trade. Those two trades alone, I hope going through those were helpful. I guess, the real lesson here, obviously there's nuance in both trades, but this 3-8 cross here, waiting for technical exit on a bullish trend day, you can kind of be comfortable and safe, just not even worrying about it. We didn't see no crosses, almost crosses, but the whole time we were safe. You know what I mean? And as we get extended from VWAP, that's going to be our exit. Same with MRK. Find your intraday entry. Pullback was back to the level, or you could have waited for a 3-8 pullback, ride it all the way, not even stressing at all until a 3-8 cross. Now obviously that was a bullish trend day, so this would be different on a different day, but I just thought this was kind of helpful for me. I had two really good picks, two very similar setups, just one by giving myself a tight stop I missed out on a really good trade. We have to pay attention to the whole story. Stock was strong enough to gap up above the SMA and downward sloping trend line. Stock was strong enough to hold half the opening green bar, and until we get into that gap, we're still bullish. So a stop below VWAP didn't make sense. That's all I wanted to go through. I hope it made sense to you guys. Doing this kind of stuff is really helping me out, and I hope to provide the same kind of value for you guys. Or if you already know this type of shit, that's fine. That was a little trade recap. Let me know if you guys liked it. What did you find helpful? Or if there's anything that I'm missing, let me know in the comments. Don't forget to like, comment, subscribe. Let's chop it up below. Until next time, see ya.